Hi, Bill Bodner here, Mortgage Market Guide. Thanks for tuning in to our MMG Recap. So this week it was all about the Fed. Now, the Fed came out. Of course, they didn't raise rates. It wasn't expected. But their statement, believe it or not, it was even more dovish than the market was even anticipating. I think while some of the text wasn't a big change, they already committed to inflation being low, and that was not a surprise. They did say that the economy is slowing a bit. But I think the big thing is they removed a rate hike off the table for 2019. Now, if we go back just a few months, back in October, the Fed was on a path to raise rates 3 times in 2019, and it was happening regardless of the data. So this is a big change. So we're not going to see a rate hike in 2019, which is, giving stocks in the bond market like a breathing a sigh of relief. But what they also said is, they forecast one next year. So if you're sitting here in the mortgage business, we're looking at maybe one rate hike between now and the end of next year, which is really remarkable. Big, big change. And that's why we're seeing the bond market move higher, stocks even move higher a bit. And the other thing that they mentioned is the balance sheet. So they're going to have the balance sheet. Remember, they have about $3.7 trillion worth of bonds, mortgage-backed securities, treasuries. As it relates to the mortgage-backed security portion of that portfolio, they are not going to reinvest the money back into those. So as those bonds roll off, those mortgage bonds, get paid back, refinance, whatever that looks like, those funds will not be reinvested back into the mortgage-backed security market. They will be reinvested into the treasury market. So the Fed ultimately is going to allow mortgage-backed securities to roll off their books. Not a big negative for the mortgage bond market, but I think the fact that the Fed is removing that tightening, that roll off of the balance sheet, again, is a positive for the financial markets. I think what we get out of this week is that complacency tone that we've discussed. And when we talk about complacency, what do we mean? The lack of volatility. It's being spurred by the fact that the Fed, interest rates and inflation are not a threat, right? Rates aren't going higher. Inflation is not a problem for now. And the Fed's not hiking. And so with that, it allows, rates to kind of be where we are right now, which are, if you take a look at the chart, basically 1-year highs in price, 1-year lows in rates. And this is a little bit of a breakout that we're trying to make heading into the weekend. It'll be interesting to see if it sticks. And at the same time, we're watching the yield on the 10-year note, which had a real bad problem, impossible to get beneath 260, down the low 250s as we speak. So really good story heading into the spring housing market. But what we must remember is that complacency is always followed by volatility, right? And so it will change. And so the one thing, we said inflation is not a threat. That's the one thread that we're watching here at Mortgage Market Guide, because we're watching commodity prices up anywhere from 10 to 15% so far this year. We're watching wages running at 3.4% year over year, the hottest in a decade. And that can be inflationary. And I'll tell you, we're one solid print on inflation that would absolutely spook the bond market. So, I would be talking to clients. I would certainly want to be, advising them, of this good story heading into the spring housing market. But I would not remain complacent for long, because this story will change. And guess what? Next week, couple of big numbers to look at. Number one, GDP will be out next week, as well as PCE. PCE, the Personal Consumption Expenditure Index, is the Fed's favorite gauge on inflation. How that number goes, right, is something that the Fed will be watching obviously carefully, but that could be a number that can move the market, because inflation is the big thing to watch right now. Listen, thank you for tuning in to the MMG Recap. We'll be back at it next week. Bye for now.